All right, ladies and gentlemen, I hope you had a wonderful day. It was another crazy one. We had multiple option gainers. The 3M from yesterday, that was our 1,000%er, and the market hit another all-time high after hours. And the reason why? It was all about earnings once again, and Netflix after the bell. This is something we got to talk about, and given that all the big data this week is happening on Thursday and Friday, today we are going to focus on Netflix stock, why I think it could go above $600, and how I plan to trade it. We're also going to go over the plays from yesterday. Like I said, I did think a lot of them were going to lose, but they actually ended up hitting. The Verizon, $9 to $41, the Procter Gamble, $30 to $200, and then it came back down. That's the one I ended up holding. The 3M I sold early, and then even RTX, this one $30 into $1.50. I sold out around like 80 or 90, so I left some money on the table, but we also made plays for tomorrow, and it is the same strategy that we went over yesterday. So Chad, I really hope you guys have been paying attention. Make sure you check out this tutorial because a lot of people have been seeing a lot of success with it. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. I usually say that. I'm telling you so you could go and see it on stream and so that you could get everything full and live. But throughout all these earnings, we are doing every single one of these plays live. The set that we did yesterday, all done live. It's free 99, and even before that, the other weeks. And I want you guys to learn the strategy because this has been very helpful, especially when options have been a little bit tricky. So Chad, bear with me. I know some of you like Netflix and some of you don't, but I got a chart for you. You're gonna see I got reasons, I got pictures and everything. You're gonna enjoy it. I'll get to some of it, but here's the deal. Before I get into any of it, I will tell you I'm very biased when it comes to Netflix. I've owned them since around 2014, 2015. I have got a nice return after almost 10 years. I mean, I sound old when I say that, but we also bought Netflix for the long term when it dropped down to the hundreds and $200 not too long ago, about a year and a half, almost 2 years ago. So don't worry about it. And even then, there's plays, even like today, you'll sell early, you'll miss out. If you ever feel bad at any point, just don't forget. Bill Ackman, he's had a lot of awesome call outs, but he lost $1 billion on Netflix, sold out after a month, and then like 6 months later, it started to double up. So the point is, don't ever trip out, and the long term is always the answer. Yeah, I had to throw that one in there, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, with me telling you my bias in the way, I love Netflix and all of that. Don't get ahead of yourself. So if you think you're just going to watch this and go buy it all insta-day calls or whatever, and it's going to run up, I would be careful. I'm going to share with you the plan at the end of this, but let's talk about some of the reasons why Netflix can go back up to 600. And the first reason is it is back to its old trading range, and now they have growth on their side. Last time they got up to these $600 levels, and honestly, we got to pull out like a 1 or 2 year chart because before we bought it, this is where we were buying it in the long term. We bought it a couple of different times on the small account. We really sniped the bottom on that, but it is back up to these $500 and $600 levels, and the thing about it, they were kind of growing at that moment, but why did they start slipping from the 600s? Because the growth started to fall off, and once people were saying, oh man, this thing isn't growing, things got a little dark for the company, and they started to really dump. Again, the company went as high as 691 all the way down to 167 just in a couple of months, but now they are reclaiming that past earnings range. When they started to drop off, it was about 505 to 558, and then leading in from 624, they are getting back to this older and higher trading range above 500. Now, the last couple of times it got around here, it did have a little bit more more difficulty, and that's why I hope you take your time with this one, but they do have growth on their side, and the last time they were getting in any of these moments, they are showing a semblance of their old self, and they are doing that in the form of growth. So that is your first reason. The second reason, it's going back to the growth story. This was their best fourth quarter in their entire history, and on top of that now, they have survived the streaming wars. Last time that they were dumping and selling off and lost the $600 range, it was because there was a lot of competition. They still even acknowledge the competition, but you remember there was HBO Max, there was Disney Plus, there was Paramount and Peacock and Hulu, and you could go down the list. Everybody was getting in streaming, and people were getting worried that Netflix was going to lose their market share. Their growth did in fact drop, but now they are returning back to a level of growth, and if you compare them to a lot of the other streamers out there, especially one of this size, they are making their mark. On top of that now, their international hasn't peaked, and they still have room to grow. So here's the first chart I'm going to show you, the year-over-year growth right now for this quarter. In fourth quarter, they did 12.8%. They have not done this ever, and if you want to go compare to 1 year ago, they were at 4%. And I thought I had this one in the document, but I don't. But even if you go back another year when they were at that $600 range, when people were getting very excited, they were doing less revenue, and their growth rate was 8.9% on that fourth quarter for 2021. So for them to return back like this is a very big deal. But now this is where it gets really interesting. I wrote it up here. Netflix is only 5% of the global paid TV market in the world, and currently they have less than 10% exposure in every single country in the world. Now, this is from their earnings, and granted, you could go down a little bit and see the disclaimer. They're like, the UK measures views across 4 screens, TV, smartphone, and tablets, and all others are TV only. But take a look here. Whether it's United States, the United Kingdom, Mexico, Brazil, Spain, in red, that is Netflix. They still have the international market, and they have a lot of other things that they are still working on. So to alleviate this fear that they are returning back to growth and doing so at a very high rate and bringing in more money and even forecasting even more going forward, which hopefully 2024 does bring out good things. The whole reason why anybody's making a big deal over this quarter four is simply because quarter four is usually not when they go up. Maybe nowadays the economy, inflation, maybe Netflix is a new Christmas gift. Who knows? I guess with the password sharing. But that's the second reason all in all. And finally, maybe we don't like this one, but 3, they are looking to raise prices again, and they are still not done phasing out their memberships to turn them into paid editions. This is something they talked about with how they are moving people from shared accounts or requiring them to do the password stuff, and if they don't want to do it, they could opt into an ad account. They're getting rid of their cheaper basic plans and moving them to the ad accounts, which are growing at 70%. But you see this chart up here, they have a lot of exposure. They are doing a ton of different stuff they weren't doing a couple of years ago with their pricing, and now it is still giving them more avenues for growth. And even just in the chamber for 2024, they have a lot of these phase outs, phase ins, and passwords and pricing that they are going to be able to take advantage of, and it is all looking very good. So with all that being said now, I do think it's going to trade in 600. How it's going to do there or when, that's maybe the real question you're asking. That's going to be the problem here, because the timing of all of this is going to be wild. I do not think this is going to be something immediate. I do want to see how it works into the range, and I'm not trying to say, okay, yeah, this is the best company in the world, you should go be buying it now. Not really, and I guess I'll switch to the plan. What my plan is for this is hold for the long term. Why is it not showing you? There it is. Hold for the, oh, wait, no, we got to go down a little more. Hold for the long term. So although I do think it's going to be moving up here, my main plan is hold. Would I be buying this for the long term right now? Not really. I think they have a lot of premium. I do think that they are coming up with a lot of new growth ideas, and I think they're going to be able to pleasantly surprise, but in the short run, they are up over a couple of 100%, and that right there could kind of limit some things, but I am going to be looking to trade this back and forth. And now what I want you to really understand is that you do not need to FOMO right now with high premiums. At the very least, the stock moved up and it's doing great, but the premiums are going to be high. If there's one thing that I could relate into the options lessons and the stuff we've been seeing recently, notice how much it moved today. $46. The option chain was pricing in $44. The stock is up 9%, but this isn't really surprising Wall Street. We want to see if everybody feels the same the way I do and the analysts come out and they raise their targets. This is what is going to drive the stock to 600 over time, and this may take a couple of weeks. It may take a couple of days, but in general, I'm keeping all of these bullish factors in mind, and I will be eyeing the 600 just as you've seen stocks like Nvidia and even Meta move up into certain ranges, but especially Nvidia with it hitting $600 right now. But the point is, although this earnings was good today, most of this was expected. They did blow out the subscriber numbers. They beat by 50 or 40%, a very big margin, and they got a lot of good things going, but it's not as if people were expecting Netflix to be slowing down just like they were when the stock was trading at half of the price. So people did kind of expect this. One big driver of the timing of how this is going to get into 600, sadly, it's going to follow along with these upgrades and downgrades, the institutions and the FOMO buyers on that end. So hopefully you keep all of this in mind and keep in mind why it has been an outperformer for a reason. And really what I'm going to be looking for is Netflix on any market pullbacks. If we get any volatility, the Fed, that's where I'm going to be looking for option positions to start flipping and trading that range if we get the opportunity. I do think it's going to be a great continuation for tomorrow, and those two standard deviation plays, we should be watching them on the short term tomorrow. Those are going to be the plays another $40 out or so, because they'll probably drop after opening up, and then we'll see as everybody starts flowing in. But the real big thing I want to watch is Netflix becoming its own little safe haven, just like the AI stocks have been, just like other tech names. They have proven themselves over the last couple of quarters. Even when we've gotten market volatility, they've been able to hold up, and this earnings solidifies that, and that's going to be the real basis of this trading from $500 to $600 or higher. It is going to be watching as the market moves around until they have a bad earnings now that comes in and kills that growth and kills some of the stuff that I outlined for you. I really think they are going to be in their own little world. So with all that being said, I'd watch out for Netflix tomorrow, but this video, this play, it is not all about tomorrow. If anything, I would say watch this over the next quarter or two, especially as we get into more volatility with the market rates, even the election. We'll see where this takes us, but now Netflix is coming out the gate strong. It already ended last year very, very good, and now they are going to be proven and maybe working their way into their own little title as the king of streaming, and now maybe Wall Street will respect that and reward that. So we'll see how it all plays out, but that was the main topic that I wanted to go over. But now, as far as the plays yesterday, we went over this and we were talking about what happened and all the different plays. The only plays I lost on, remember, we did 6 plays, 3M hit, Verizon hit, Procter & Gamble hit, and RTX hit. The only plays that didn't work out, it was the GE. That's the one we spent the most amount of money on. We went both ways, and believe it or not, we were in the money at one point in the morning. I guess if you pull up the daily, it shows the wick. Oh, they edited that. I guess, okay, it said it hit 116. I was getting excited, but that play, it went down, it went up. They barely moved. We played 2 standard deviations. The stock didn't move. You lost money on both sides. We lost that $100 there. And then the other play, Logi, this is a great example of even Netflix. The stock went down by 11%, but believe it or not, those options that we got, the 75s, they went up in the morning, and you could have got a nice little return. You had a little bit of a gain, but they ended up going down because these were pricing in a 20% move. Even though the stock moved down 11, it was priced in by the option chain, so why would these plays go up, even if there is a little bit of time? So hopefully that's a good lesson. That's even why we avoided Netflix today. As much as I love Netflix, and I'm talking about it now, we got it for the long term all day today. I said I'm staying away from these options because it was pricing in 10% at minimum in both directions. So unless it moved 20% to get in the money, even if it moved 10%, 12, 15%, chances are those options probably would not have been worth as much. So wanted to shy away a little bit from there. But as far as the other plays that we made today, let us get into those, and I'll see if I could pull them up. I guess we'll start with the first one. Go in alphabetical order. I made a play on Abbott, and these are all for tomorrow. So I grabbed a 120 call, and I only grabbed one of these, and a lot of the plays, let me see if I got the document, and this will highlight what we did even today. We spent $20 both way on Verizon. I got $27 back. I sold out of it early, $9 to 27. That was after we sold the 3M. I said I'll take it. Once again, I sold early. Even on the 3M, I only got back $225. Could have made as high as $480. The GE we lost. RTX, we got is it $51 back? No, we got like $85 back, but we spent $51. But all in all, we brought in like $320 profit. Procter Gamble, I spent $35. It was high as $2. It's worth around $1 right now. I'm still holding on to that. And then Logi, I'm still holding on. We'll see if we end up getting lucky on there. But the point was, we made all of our money back, got a little bit of profit, would have really killed it if we held on for a little. But I've been saying my goal here is at minimum get my money back. So if I want to play all of these plays, as long as I'm not losing money and just stacking up and we have a little bit of history, one of these we're going to hit and we're going to be able to cash out the full amount just like the TSM. And as long as you're not losing, this is what starts pushing the account up little by little and hopefully protecting ourselves. So remember, yesterday we spent $281, brought in $300, still got another $100 of profit we haven't realized, and even like another $30 that we could take out from remaining plays. So not too bad. Then today, these are the plays that I made. TXN, I went both ways for $91. This one dropped after hours. However, it didn't really move too crazy. That's the one that kind of sucks there because it might play out like the GE tomorrow where it moves down but not down enough. We'll go over those plays. We spent $50. STLD both ways. Abbott, $45. I think I went both ways on that one as well too. Then Kimberly-Clark, I went one way to the upside. SAP, one way, $25 to the downside. ISRG, $65 to the downside. And I didn't write this one down, but then I did CNI for $30 to the upside. So I spent about $300, $320 today. So took some of the money we made, put it right back in, and now we have 1, 2, 3, 4, 5, 6, 7 plays for tomorrow, and we already got results on a couple of them. So we'll see how those go out. But now as far as the exact plays, and I'm showing you these so you could see I am doing the exact calculation from this tutorial. We're calculating what's priced in. Even if it doesn't hit, it's still giving you a good guide of where things can go. But what we ended up doing, 2 standard deviations. Abbott, I went both ways. I grabbed the 120 call. I grabbed one of these for $25. Damn, it went as high as 60. That's probably a glitch there, but we went to the upside. I also grabbed the downside. They're going to be reporting tomorrow morning. Grab one of these for 20 cents and went as high as 24 to 26. Not too bad. Then the CNI, I grabbed a 135 call for February 16th. They actually had a good earnings and they're buying back 5% of their stock. I'm hoping that this one goes, and we only went one way on the call, but I grabbed the 135s. I think they're trading at like 127 for now. And then the other railroads, PACCAR, yesterday, they ended up doing good. So hopefully that one pays out. But that was the second play. And then the third play, this is in no particular order, ISRG. I thought they would have went down here. And now usually this is a play that could move big. And I didn't want to take it at first, but I was like, hey, it's $60. I went one way to the downside. I didn't want to play it both ways because it would have been 120. We'll see how it would have played with the upside, given that it did have an upside move today. But I grabbed one of these puts here for about $60. It was the 325, another 2 standard deviations, and then I went Kimberly-Clark one way. And this one, a lot of the plays here too, if I did go one way, if I went both ways, they were hard to tell. But Kimberly-Clark, I went one way. I only spent $18, and we grabbed the, what option was it? The 133 call. But why I decided to go with it, I didn't like how it had the pop, and it popped today because of Procter & Gamble. But somebody was saying, what made you only go one way? Why did you want the 133? One, it was just there not even a couple of weeks ago, or I guess towards the end of last year, and that's where they started the beginning of last year. But the thing about Kimberly-Clark, just like Procter & Gamble, which ended up hitting today, they are trailing behind the Staples Index. The Staples were up like 8 or 9%. They were negative on the year. S&P was up 15%. They were negative on the year. I figured this could be a good area where, hey, $18, maybe it does surprise. The stock doesn't really move. If they can get a surpriser, this one might be good, especially since it's trailing behind. So if they have a better than expected earnings, I do think this one will hit. So we'll find out how that one plays tomorrow morning. Then this one, I don't know why I wanted it, but Steel Dynamics, I played both ways. I grabbed a 135 for February, spent $20, and then I grabbed the put for $35, I guess, or a $100 put for $35. And I know why I played it. It was cheap to go both ways. Those contracts were a little bit more money, but the thing about Steel Dynamics, it's kind of hovering at the high. They've had a recent big sell-off, and once again, this was another name that was underpacing as well as had a pretty big move in the last quarter. So I said, hey, I'm kind of down to go there. It allows me $50 both ways. A lot of the plays where you could play both ways and the stock has moved up a lot on the quarter and I'm able to play both ways for like $50 or less than 100, I kind of like that. You know, the ISRG, that would have been like 120, 130, maybe more. I'm not really there because if I want to play 7 of them, before you know it, you're spending $700, $1,000, and that can start to add up pretty quickly there. So that was it. Or I think there was one more, Texas Instruments. These were the final ones that we did, and this one will get tricky. This one was $169 to the upside. That was $49, and then I did the next week contracts, the 160 put. These were $51, and they started to run up at close. You actually had a gain from the time that we played it, but like I said, this one is going to be interesting if they get downgrades or not. They missed earnings. They guided down. It moved as expected, but if it doesn't move outsized, we will not get paid on it. So we're still in the game on a couple of them, but if those tomorrow morning, the Kimberly-Clark and the Abbott or any of the other ones we have for the AM, if those don't end up hitting, we will lose our $300 even after making some, but that is the whole point. Even though today we hit a majority of the plays from yesterday, usually we need outsized moves. So as far as tomorrow now, I haven't looked at the plays. I am going to be doing the same strategy, and if you want to see this live, I'm telling you, just come on stream. What we're going to do around 11 a.m. Eastern time, I think is a good time. 11 a.m.? No, 11 a.m. Pacific time. I'm going to be going over Tesla, IBM, ServiceNow, Lam Research, United Rentals, all of the companies that report after hours tomorrow. We will be doing those intraday, and then all the companies that report in the morning, I will also be doing those at the same time, and that's how we're going to be going through these till all of the earnings run out. So, Chad, we'll see where it takes us. As far as anything else, I sold out of those ON plays, got a little bit more than 30%. Like I said, it was a value play. I didn't really like it. I got filled there. We flipped the coin finally. I took the little profit there, made $80 off of 150, said I'll walk away, take a W there, and I'm no longer in that play. Other than that, we'll see any of the earnings. We'll see where we wake up to tomorrow with some of these, but I hope you're ready. And that is your watch list, ladies and gentlemen. Make sure you're healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember you got a purpose, baby. Don't you ever forget that. I don't know who need to hear this. I don't know what you going through or not, but you got a purpose. Let it be revealed to you over time. Don't rush it, but you were here and born with purpose, my friend. So ride into that. But I love you. I'll see you in the morning. Drink that water. Stay hydrated, healthy, all that good stuff. And peace out, horn.